Hey folks, welcome to this week's episode of Kickstarter Real Estate Investing. In this week's episode and in the coming weeks, we'll be going through different search criteria which will help us find and also go through the underwriting process of a real estate investment properties. Okay, so before we start opening our laptops or phones and going to Zillow or other places, let's just understand what should be our criteria by which we should be using to search for different investment properties. And why is this important? Because if you don't have a criteria and if you just have a vague feeling of, okay, this is what I'm looking for, you can get overwhelmed very quickly. You'll waste a lot of time scrolling through different properties and not knowing which is a property it's an ideal for you or not. Okay, so just like any other thing, the better search criteria you have, the better responses or results you'll get from the search, and then you can decide which is the right one for you to go ahead and do an investment on. Okay, so to make it simple, what we'll do is we'll select one particular high-level criteria, which is like we'll look for single-family homes, and then we'll use the second high-level criteria is that we'll look for properties which we can buy and hold for a long period of time. Now, why did we choose these two criteria? Because when you're starting off in real estate investing, the simplest way to get in is to look for single-family homes. Now, you can always look for duplex, triplex, quads, you can look at apartments, you can look at condos, but I would like to start with single family homes because that is the one where you can have a lot of independence and liberty when you buy that particular property as compared to buying a condo or apartment where you are really constrained by the HOA and you have to basically manage your expectation based on what the HOA is providing you in that condo or apartment complex. Okay, so we'll use single family homes as our main criteria, so that's what we will be searching for. Now the second criteria is buy and hold. Just to keep it more simple to begin with, let's just start with, we're going to look for single family homes and we are going to look from a point of view of buy and hold for a certain period of years. Okay, so now when you start looking from a single family home perspective, there are three main criteria you should be looking at, right? First criteria is always going to be how much you can afford to buy a particular property. So what is the price range you're looking at? And why is this important? Because the price range will determine how much money you take as a loan in terms of putting a down payment. Okay, so what I'm also doing is I'm trying to take away that aspect of it which says you can go and buy a property by putting all cash down. One, it's not the greatest of strategy because you're not using your money in the most optimal way. And two, most of the buyers who start out in real estate investing like to go the conventional route of taking a loan on that property, using the cash flow which you get from it to pay off the loan so that it's a free and clear property after a certain number of years and you're not committing a lot of money into it. Okay, so for this criteria, when you look at a price, when you look at a price range of a house, there are three things you should look from a price perspective. One, what is the down payment which you can afford for it? Most of the single family homes which you buy as investment properties require a 20 to 25% down payment. So you should always see, okay, this is the money I have to bring to the table along with closing costs. So that's my first criteria from a price perspective. How much money can I put down for a house which I'm going to buy? The second criteria is going to be the reserves. Like if you remember from previous episodes, reserves will become a very important part for you when you run your day-to-day business of real estate investing. So there is a capital reserve which you need to keep a good amount of money for big expenses which can happen. If there's a roof damage, if your HVAC goes away, if your water heater bursts, anything like those things happen, you need money for that. The second thing which you also need to think about is your operating expenses and OPEX reserves which you keep on the side, right? So this is for your day-to-day expenses of there is a faucet leak which happened, or you need to pay for your landscape work which has to be done, you have to do for your snow removal. So those things go into your reserves. So that's the second criteria from a money perspective is how much reserves do I have and how much I need to keep aside for this particular property. Okay. The third thing which you need to think about is what is going to be my monthly payoff from a mortgage perspective, right? So you have a down payment, you have reserves, and this is your monthly payment. Your monthly payment will include your principal, interest, taxes, and insurance. So those are the amount of money you need to keep aside. So based on the rent you get, that will also determine how much money the rent can pay off for that particular aspect of your mortgage. Okay, ideally you want the rent to completely pay off your mortgage, okay, for the rental property which you have. So that's the first aspect of it where you start thinking from a price perspective. How much can I basically afford to buy from a rental property perspective? The second thing which you need to think about is going to be the age of the house. Now, the age of the house is directly related to how much maintenance work you might have to do for that house. So if you buy a brand new house, obviously there is almost zero maintenance you have to do in the first couple of years. And if you buy a house which is, let's say, 10 years old, you can start thinking about a different operating expenses which you will have on a day-to-day maintenance when you start managing a property which is, let's say, 10 years old. Okay, so that is the other thing you need to start thinking about, is like what kind of maintenance work you want to take on yourself when you buy a rental investment property. Do you want to be a little more passive? Then you might want to go and buy a brand new or a very new property. But if you are okay with taking on some kind of handiwork which comes in, or you might have a list of your electrician, plumbers and handyman which are available, which can take care of it, then you can also look at an older house as an investment property. The third and the final thing which you need to think about is your geographic location. Now, this is not so much about what is the street intersection where this house is going to be built, which is important, but it's also going to be more important to understand from a geographical perspective, how far or near do you want your first house or first investment property to be. I generally apply a rule of thumb is like, if anything which is a 1 hour drivable distance, that's good enough for me. So if anything happens, it requires my attention, I can quickly go have a look at it, fix things if required and come back. Okay, so from that perspective, understand what is your comfort level from a geographic location from where you are located. Some folks like to be only half an hour away from that investment property so they can keep a good eye on it. Some folks are okay with 2 or 3 hours also. So understand what your criteria is going to be there, what is your comfort level of how far you want your investment property to be for your particular place where you are staying and where you want to operate it from. Okay, so those are the three main criteria we are going to use when we start looking for single family homes for buy and hold. One is the price, or how much you can afford. Second is going to be how much old your house you're okay with, like how old the house can be. And the third and the most important thing is going to be the geographic location, like how far can the house be from where you are located. Okay, in the coming weeks, we'll go and drill deeper into it as we start doing searches and as you start looking at properties, like how all these three criteria play and work with each other so that you're able to find the right investment property when you get into the journey of investing in real estate. Okay, hope this episode was helpful to you, and we'll have some more details about different search criteria and how to go about it in later episodes. If this was good, please go ahead and like and subscribe to my channel. Thank you. Bye.